Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, May the 10th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies you can implement into your portfolios, but please do that in your own way. And also, please remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having all that out of the way, let's get it on with some economic data. Across the pond, what do we have? We got a bank holiday out of Switzerland, but we got Italian industrial production coming in at 1.2%, expected to be 0.4%, so much better than expected there. Great Britain's manufacturing production month over month came in at negative 0.1%. It was expected to be a negative 0.2%, so it's better than expected on that front. We also got construction output out of Great Britain, negative 2.3%, but it was expected to be negative 2.1%, so slightly lower than expected on that economic data point. And then we got a slight revision to the previous number. It was a negative 1.6%, came in as a revision at negative 1%. So a nice revision on the back end, kind of making up for that construction spending there. Industrial output out of Great Britain in line with expectations at 0.1%. And then we also got the Great Britain, that Great Britain's bank kept rates unchanged. The Bank of England. And then finally, here in the United States, we got consumer price index came in at 0.2%, expected to be 0.3%. Core consumer price index came in at 0.1%, expected to be 0.2%. So we're seeing lower than expected consumer prices. And then finally, we got natural gas storages coming in at 89 billion cubic feet, expected to be 81 billion cubic feet. All right, on to the overall markets. Crude oil, it is on a weekly chart right now. So keep that in mind, but I just wanted to look at that. It's staying right there in the trend channels that I've set up here. So just a nice marching to the upside. Somebody was saying most of this is having to do with us pulling out of the nuclear deal with Iran. At the end of the day, we saw some big demand coming out of crude oil recently, and I think that that's the real driver in crude oil because, like I said, we not only saw a drawdown in crude oil inventories, we saw a drawdown in gasoline, a big drawdown in gasoline, and a big drawdown in distillates, which means that there is demand on all fronts. We cannot distill regular oil fast enough to keep up with the consumption of those distilled products, that being gas and distillates. All right, on to the overall. I can throw this on a daily chart for you just to give you an idea as to what it looks like if I can find the one I want. So again, this is the daily chart. The other one was weekly bars, and we are lockstep in with that right now up against the 61 Fibonacci level, which is going to act as resistance. But I do consider it, do believe that it's going to stay in this trend channel on an upward trajectory for at least the foreseeable future, at least the next month or so. It's going to kind of want to trend up there, I think. Gold futures slightly higher on the day. We were having a bit of a mixed bag with the equities, which was causing some of that. Bitcoin futures up almost $50 on the day, back above the 23 Fibonacci level, but it is right there at the point of control where the most time and volume has been spent, so there really is no technical change there other than I'm still in the camp where I believe it wants to go down here and test this low here, but right now, doesn't seem to be the case, but I believe that the market just feels like it needs to go down there and test that for some solid comfort to the upside, or for the upside anyway, if we start bouncing away from that. Bonds, slightly higher on the day, again, having to do with the equities. We got VIX coming off slightly, but this is what I was talking about with the Dow Jones Industrial Average up about 180 points. Trying to press up against this 23 Fibonacci level, so that's good. That's why VIX coming off. NASDAQ near the highs of the day with up 52 points on the day, continuing to climb higher. We got above the 50 Fibonacci in the E-mini S&Ps. This is going to be a bit of contention, just a little bit higher there to break through that. That would kind of break that negative trend that we've been seeing. Then we can look at the E-mini S&Ps overnight inventory, pretty flat, and then into the day with the economic data, we started really rallying. All right, a couple of things that I'm looking at. With Caterpillar, I have on the June, the 135 puts in there. I'm going to kind of keep an eye on this. Really close to 50% of my max profit. As a matter of fact, it's just slightly over 50% of max profit. But I want to keep an eye on this today. If it pops above that 23 Fibonacci level there for the extension and for the regular Fibonacci's, I think that that would be a nice move. If we don't get above that, I'm going to be keeping a real close eye on this and have a quick trigger finger to get out if we start seeing any type of weakness whatsoever in Caterpillar. All right, I didn't play Roku yesterday. The bid offers in those was like 20 cents wide, so 20 to 25 cents wide. I wasn't going to mess around with that. I just decided to walk away from it. Plus, I didn't have a really good feel as to what their direction was going to be. I had a feeling it was going to be up, but I'm not really sure. I haven't traded a whole lot of Roku, so I just decided to stay away from that one. YELP is coming out with earnings today after the close. Looking at this one, may play it to the upside, not real sure. I haven't really dug into YELP in quite some time. I haven't traded it in a while, but I'm going to do a little bit of digging on it. But just the way that the market's moving higher, I think that these stocks are going to continue to move higher as well. Hopefully, most of the negative forward guidance is past us, and the market's already kind of pricing that in a sense. All right, NVIDIA I am going to be playing most likely to the upside. I'm 90% sure I'm playing this to the upside. We've gotten above the 61 Fibonacci level. That's going to act as support, so I should have a couple of support levels in my favor for setting up these puts. So I'm going to probably play NVIDIA to the upside. And that's about it for today. I've covered just about everything I'm going to be looking at. So today's webinar is going to be on the short call butterfly. It's a really great strategy. If you know how to set it up correctly, you have to have the right environment, the right strikes, the right collection. Yes, you can go online and figure out how to do a short call butterfly. Go check it out. Please do it before the webinar, because when I teach it, you are going to learn so much more about location and environment that you are not going to find online. So I don't care if you go online and figure it out. It's not going to be the way that I teach it, and you are going to learn some very valuable things in this webinar. All right, that's it. Other than give me a thumbs up, thumbs down for a like or dislike. If you give me a dislike, let me know what I'm doing that is making you dislike it, all right? Maybe I can make some changes and make it better for everybody, all right? So that's all I got for you today. Other than if you can't take that, take it easy.